Hello guys, today I'm going to be teaching you about the basics of price action and how you can learn to analyze and just improve your trading in general. I'm pretty sure majority of you watching this video right now might not have a clue on what price action is, but some of you who do know what price action is, you might be missing that thing that can improve your trading. So I promise you by the end of this video you'll have an idea of what you should do, of what you can do in order to improve your trading. So let's start. Alright, so the first thing I'm going to teach you guys are candlesticks. So candlesticks are basically what you're seeing on the chart now. They represent price movements on a certain price points, right? Let me not get into the definition. So these are candlesticks, right? This is basically what makes a forex chart. We use these things to analyze and to predict future price movements, right? So I want to cover which ones are the most important, right? Personally, I say these ones are the most important because I use them in the way that I trade. So the first one I'm gonna go with is the bullish engulfing and the bearish engulfing, right? So bullish engulfing and bearish engulfing is basically when in a case of a bullish engulfing, it's basically a blue candle which completely engulfs a previous red candle, like this one for example. You see how this blue candle covers this whole red candle. This usually means buying momentum, buying pressure is now becoming powerful, more stronger than selling power, and then usually the market goes upwards, right? And then bearish engulfing, here's another example. See how this red candle completely engulfs this blue candle and then price just fell. So it's the same thing, just vice versa, right? So the second one is a doji. A doji is something like this candle right here, right? This is basically a doji, and okay, as you can see, it's this one, this one, and this one. A doji, the characteristics of a doji is basically a candlestick which has a slim body but very long wicks, whether to the upside or the downside, doesn't really matter, but it just has long wicks and a small body. What does this show us? What does this tell us? It basically tells us that price is like the market at that point is uncertain whether it's gonna go up or down, and sometimes it resembles a potential change in direction, right? And it's very important to use these in support and resistance levels, which I'm gonna cover later on in the video. But just take note of that dojis, actually all these candlesticks I'm gonna tell you about right now, actually it's only two, they are very important in support and resistance levels, so you must keep an eye on them when price is on a support and resistance level. But we'll cover that later on in the video, support and resistance, right? So yeah, just so you understand, dojis are basically things like these, and let's see, something like this. Although this body is not too slim, but it has a long wick. So and here at the resistance level, change direction, but then we'll talk about that later. Now we are at support and resistance, right? So support and resistance is basically the most important thing in forex. I know later on in the video I'm going to tell you about something else which is also very important, but support and resistance is basically how many institutions, small traders like me, big traders, that's how many of them make a shitload of money, right? So what is support and resistance? Support and resistance is basically, okay, we'll start with resistance now. So resistance is basically a roof and support is like a floor, right? It's something that resistance is basically something, a price level where we expect the market to drop every time it reaches, né? Same thing for support. It's a roof and it's a barrier that the market might not be able to penetrate in that period of time, or if the market does penetrate it, né, it's gonna be retested in the form of a resistance level or a support level once more. So what do I mean by that, né? Every time the market comes to this point, right, it basically makes this a strong resistance level. For example, it touched 3 times, right? It touched 3 times, so that means it's a strong resistance level, right? So every time the market came here, you would have expected to take sells, depending on the trend, and I'm gonna cover trends later on in the video. Depending on the trend, we would have expected to take sells, but in this case, since the market is ranging sideways, we would have taken a sell here and here. We wouldn't have taken a sell here because this is when the market created the first level of resistance, right? The first roof, basically, that the market couldn't manage to break out of, right? So let's say you were here, for example, right, and then you saw the market going upwards. As soon as you see the market here, that's when you take a sell, and I'm gonna make an example in a real chart now. Same story for here. There's a point here, there's a point here. As soon as it comes here, you buy. Same story. As soon as it comes here, you buy again. So, but support and resistance are very important when they are used with trends. They're very useful when you use them with trends. So what do I mean by that? I mean, your understanding of trends has to be impeccable, because if you are good at spotting support and resistance levels, but you're not good at identifying what trend is the market at, then you're gonna lose your money, or you're gonna be a 50-50 trader. You're gonna deposit, lose, win, eh? So if you want to be profitable, you have to understand both. And yeah, I'm actually gonna talk about trends next. So, but let me make an example in a real chart, right, of support and resistance levels, so you guys can understand how this thing works, right? And it's obviously it's not gonna look as clean as the chart, but it's basically something like this, right? It's basically something like this. So as you can see, in the previous example I made of the drawings, I drew a line where the market failed to break in the first time. Yeah, so the market was rising upwards, it failed to break here, break above this, fell down, came here again, and it sold hard, right? So you'd have made a lot of money, 6,000 points. You've made a lot of money, right? And then same story, there's a point the market made here, it came down, it bought, plus minus 5,000 points, right? So that's basically support and resistance. It's very important, and majority of the time, this is how I trade, but I'll get to that conclusion in the end again. But basically, I trade breakouts and retest of supports and resistance levels, and I'm actually gonna go down to a smaller time frame in this example to show you what I mean, right? But it's basically something like this. So as you can see, where the market is at right now, right, I usually look for the market to break out above, right, come back for a retest, and then go upwards, and do the same thing over and over again. That's basically how I trade, and that's how you can trade supports and resistance levels, right? through this thing, right? And then same story if the market is gonna, let's say for example the market somehow fell below and it broke out. I was gonna wait for it to come back and test this resistance level, right? And then drop, and then carries on doing the same thing over and over again. And then you might be wondering, what do you mean resistance? You just said this is support, né? So this is support, right? This is support. So this is a level of support. But as soon as the market breaks down below and it comes back, and then this now becomes a level of resistance because the market has crashed down below, and now this is a roof that the market is highly likely not going to be able to penetrate and go above, right? So you take your sells. Why? Because you take your sells in your resistance levels and you buy in your support levels. Same story for here. As I'm expecting the market to cross above, right? As soon as it comes back and retest this previous resistance level, I'm gonna take it as support and I'm gonna buy it. It's actually gonna become support. As soon as the market breaks above this, it supports. There's nothing else you can call it. You can't call it resistance because the market is gonna use it as a floor to go back up. So think of it like you climbing up the stairs, right? Okay, you're climbing up the stairs, and then there's a roof. There's a building right next to you, and you're climbing up the stairs. As soon as you climb to the other floor, okay, never mind. That example is bad. But let me just show you a real example. Forgive me for that. I was trying to think about something, but I failed. Don't bash me. Alright, so let me just show you examples of this resistance becomes support and support becomes resistance, right? So this is the first example. This is the first example, and you'll notice how the market won't touch as crisp and clean as the examples I was showing you, obviously, because this is a market. It can't be perfect. Nothing is perfect. Just see how every time the market broke above resistance, it came back and became support. You see, so remember I was telling you that if there's a point like this, right, it becomes resistance, right? And then the market broke above this resistance and it came back, touched the resistance, became support, and it went up, right? So same thing if the market breaks down below, just think of it in the opposite way. That's how professional traders and banks and young and upcoming traders like me trade the market who are profitable, right? Okay, cool. So let me just check my notes quickly. Okay, cool. Trends, right? So before I start drawing, there are 3 trends in the market, right? And I'm actually gonna paste this on the screen. There are three trends in the market. There's an uptrend, a downtrend, and a sideways trend, right? Sometimes some people call it a sideways, a ranging market, or consolidating market. It really depends on who's talking. I can call it any of the two. I won't call it a consolidating market. It's either ranging or sideways market, right? So I personally try not to trade inside of a sideways market. I usually want the market to break out above resistance or support, and then I wait for my retest, and then I buy or sell, right? Let me just show you an example of that quickly. Okay, yeah. Let me show you an example of that quickly, right? So a ranging market is something that usually looks like this, right? The same as the example I made when I was talking about support and resistance. So a ranging market looks like this most of the time, and I try my best to not trade when the market is still in between these two black lines, right? I usually try to wait for the market to break out above resistance and above support. So let me get back to the example I said I'm gonna make of how I enter. Same thing I told you previously. I'm gonna keep mentioning this over and over and over again because people think trading is complicated, but it's really not. It's basically this one strategy that many traders use to make money, and it works for me, right? So I'm gonna keep making the same examples over and over again so that you guys truly understand that this is how Moses makes money. This is basically the strat. I'm giving you the blueprint for wealth. This is it, nothing else, right? This is an example of a ranging market. I'm gonna show you an example of when the market is trending upwards, downwards, and so forth, or upwards and downwards. So before I tell you about how I trade upwards and downwards trends, it's important for me to teach you about what makes a trend, right? So I'll start with an uptrend, right? Okay, no, wait, let me just cover this first, right? So in the market there are highs and lows, right? There are highs and lows. And this is a low, and I'll explain to you why it's a low. So this is a low. Let me just mark it for you. No, let me not use this. Let me mark these things for you. So this is a low. And this is a high. Now, why is this a low and why is this a high? This is a low because when the market was here, it was at its lowest point in that trading period. It's a low because it was at its lowest price. That's why there's this saying in the market of buy low, sell high. You always try to buy low and sell high. You buy your low and you sell your highs, right? So if you bought your low and the market went up, you're going to make money. If you sold your high and the market went down, you're going to make money, right? So this is basically what makes a trend a trend. A trend is built up of highs and lows, right? So depending on which trend, you can refer to it as a high low, or lower low and lower high. So you use lower low and lower high for a downtrend, and high and high low for an uptrend. Let me just show you an example so you don't get confused. I know many of you guys watching this are probably new to this. Some of you already know this, and I'm just going to be helping you to clarify a few things. How do I know that? I've been there. I was once like you. So I'll start with an uptrend. So this is an uptrend. It has a higher high. Now, why is it called a higher high? It's basically called a higher high because it's higher than the previous high, right? So an uptrend is built up of higher highs and higher lows. Same thing for a higher low. Why is it called a higher low? Because it's higher than the previous low. There's nothing complicated about that. So let me just mark it for you guys so you can see what's going on. So this is a higher high, and then this is a higher low. Okay, so let me just mark them for you guys so you don't get confused. See? Okay, I do not know what's going on there. Okay, it's fine. Let me just leave it like this because I'm seriously confused. But this is an uptrend, and okay, guys, my camera stopped recording, so I guess I'm gonna have to continue without my camera. Just hold on a bit. My phone is ringing. So this is a high, and this is a high, low, right? And this is basically what makes an uptrend. Now let me teach you how to trade an uptrend. How do we trade an uptrend? How do you trade an uptrend? Okay, let me just delete all of these things. Okay, so how do you trade an uptrend? You basically trade an uptrend by buying when the market is at its lowest point in that time period, as I mentioned in the previous example. So this is what you call a breakout and retest. Well, some people, it's a breakout and retest strategy. It's basically every time the market breaks out of previous resistance, it will come back and retest the previous resistance as support and go up again, come back, test the recent resistance as support and go up and go up and go up. So you might be asking yourself, so where do I get my entry point? It's not that complicated. It's basically here. Like, you don't wait for anything. You don't wait for the market to now start going up. No, you buy at that exact moment. You buy at this exact here on this dot here. You don't, as long as you are in an uptrend, you buy. You don't look for sells in an uptrend, right? Never. I mean, you could place trades and make a profit, but you shouldn't do that, because you should make the trend your friend. That's a popular phrase in forex. The trend is your friend, because if you trade against the trend, the market will betray you. So let's say, for example, the market was here and there, and then all of a sudden, for some reason, you decide to look for sells, and then you sell, and then the market just turns here instead of going all the way down, and it goes up. You've lost your money. So that's why it's very important in the market to wait for the market to come back, retest the previous resistance, and go up. Now let me make an example of a downtrend. It's basically the same thing, but it's just that it's a downtrend this time. So again, same thing. Nothing changes. Nothing changes. The only difference here is that now we have lower lows and lower highs. So we have a lower high. And why is it called a lower high? Again, there's nothing complicated about it. That's just because it is lower than the previous high. There's truly nothing complicated about this. It's just lower than the previous low and lower than the previous high. That's it. And again, how do you trade this? You trade this by waiting for the market to reach the previous support level to become resistance, and then you place your trades, right? So you might be asking yourself, why does the market turn when it reaches this point? Now, why does the market break out, come back, and then goes down again? It's basically because of the human psychology. All professional traders are taught the same thing over and over again. So it's basically become a thing of anyone who knows how to trade will see this price level and they will enter their cells and make money, right? So the banks and all the institutional traders who know how to trade, they basically push the market down. Same thing for buyers. They push the market up. So as soon as it gets here, you sell. Because why? You're trading with the banks. If a bank sees a market here, they'll sell. If professional trading institutions like hedge funds see the market here, they'll sell. Right? So that's basically it for trends. I think I should make an example of a real chart so you understand how this should look like in a real chart now. Okay, cool. Now I'm gonna show you how this will look like in a real chart. It's not gonna be as perfect as the one I just drew for you now, ne? You must understand that. So here's an example of an uptrend, ne? Just notice what I told you. An uptrend is built up of higher highs and higher lows. So just notice how the market is making higher highs and higher lows. The higher high is always higher than the previous higher low, ne? And as you can see, there was buying opportunities here. The market tested the market broke out of resistance, came back as support, and went up. And remember, I told you there's nothing you have to wait for. You don't wait for any confirmation, you just buy. You see, there's no confirmation you wait for, you just buy. No confirmation, just buy and you'll make money. It's as simple as that. Same story for here. You do not wait for any confirmation, you just buy. And that's basically it. Now let me look for a downtrend example, and also I'll try to cover a sideways market there. Okay, let me zoom out. Let me get something bigger so you guys can understand. So now we're looking for a sideways market, right? Okay, let me zoom out a bit more. Okay, so GBP USD is actually very nice because it doesn't really trade sideways that much as other pairs do. Okay, again, before I just find that, just notice how there's a high, low, high, low, high, low, uptrend, downtrend, same story, low, high, low, high, low, high, low, high, low. But okay, here's an example, right? I think this is a good enough example. Because I can't find a proper one, so I'm gonna use this. And sorry if I won't be able to zoom down a bit, because it's gonna take me somewhere else. So basically, the market was trading sideways here, right? It wasn't very specific as to where it's gonna go, right? And you remember I told you, if the market breaks, you have to wait. Like in between here, you have to wait for the market to break out either above resistance or below support. So what happened? The market decided to break below resistance or below support, and when it actually came back here, it sold. It sold for how many points? It sold for like 6,000 points, and this was in a weekly time frame. Okay, I'll also cover time frames shortly after, but this was in a weekly time frame, so you would have made a shitload of money, right? just by trading a retest. Okay, so let's try finding examples of sells. Now let's see, let's come here. Okay, will I be able, first I want to zoom down. I actually want to zoom down this time so it can be obvious. What? No. Okay, where is that example I wanted to make? Okay, it's been trending downwards here, but okay, let me actually make an example of a complicated situation. I think this situation is perfect because you guys are gonna get an understanding there. So okay, there, right, from that point to this point. So what has been going on from here to here? The market was trending downwards. Yeah. Now, this is a very important skill I have to teach you. Where were we gonna look for sells? So let's start off by here, right? So let's use this low, for example. Right, so as you can see, the market is trending downwards, pushed downwards here, right? Pushed downwards, fell below. Okay, although it was a bit choppy here, fell below, and then when it was actually giving us some clean movement, it came back to retest this low, right? And it fell hard, right? Again, same thing here. We find a low. What does the market do? It falls below, retests, and it falls hard. And then another example, here's another low. The market fell below, came back, retest, fell hard. And basically that's it. That's what the market does over and over again, all the time. It's just up to you to catch those right places to trade, but that doesn't mean you must ignore risk management, right? But yeah, let me cover time frames now, right? So time frames are basically these things. 1 hour, 4 hour, daily, weekly, monthly. And what are those things? What are these things? The 1 month time frame, as you can see here, it says 1 month. It represents a chart. It represents a 1 month candlestick. Every candlestick represents price movement that happened from the first to another first of another month, right? So this is basically 1 month, second month, third month, fourth month, fifth month, sixth month, basically, né? And same story if we go down to the weekly time frame. Each candlestick now represents a week of information from the chart, right? And then again, daily. So from here, all of these are 1 days. All of these are singular days. In 4 hours, same story. All of these candlesticks you see here are information based on 4 hours of price movement, and again, same story for 1 hour, right? Now, why is this important? You might ask yourself, why is this so important? It's important because when we analyze, we have to use these big and small time frames to get an understanding of what the market is doing, and that is usually called top-down analysis, right? So you'll identify your low and your high, usually, because this is in a big time frame. So you have to identify your low. For example, here I've identified my low, and from this point the market has been trending upwards, but recently stopped making lower lows and lower highs, so now it's making upwards movements, right? So you go down to the weekly. This is basically how many people analyze, many profitable traders analyze. You go down to a weekly, you mark your previous levels of structure, right? You mark them down, and then you go down to a smaller time frame to find more information to help you look for buys, right? And then first thing I'm seeing in the daily is something over here. It's not as clear as it will be in H4, but let's go down so you can see it properly. So now that I know the market is pushing upwards, like from this point it's pushing upwards and it's basically in an uptrend, right? See, again, I'm making the same example of something I made a few minutes ago. So the market is trending upwards. What do? We are looking for buys. Okay, in this case, right? In this case, it hasn't clearly broken above this resistance level, so we're gonna use this to enter for entries. So we'll wait for the market to come here, drop here, then go up, and then do the same thing, retest this and go up. So that's basically it. That's how you use time frames. You go from the bigger time frame to the smaller time frame, and then in H1 entry points are very, very clear. So this would be a crisp entry point in an hourly time frame, and you buy and you make money, right? I'll just make an example of the three most important chart patterns, and then I just don't want to make the video long, right? So I'm gonna make an example of the three most important chart patterns I use all the time. So the first one is a double top. It's basically resistance, and the second one is a double bottom. It's basically support. So what is a double top? What is a double bottom? I'll show you examples now on the screen. It's basically when the market makes an M and then it falls the opposite direction, right? As you can see, it made an M and it fell down, right? From this point it made an M and then fell down. And then same thing for double bottom, it makes a W and then it pushes upwards, right? So this is very important because majority of the time when you see a pattern the shape of an M or a W in a support or resistance level, you will expect the market to respect that level, right? And it's very good to use when you're trying to identify change in trend direction and so forth, right? And then another one is a head and shoulders pattern. Now head and shoulders patterns don't occur all the time, ne? They don't happen all the time, but when they do happen, they are extremely powerful. Here's one example of a head and shoulders, right? So this is a left shoulder, and then this is a head, and this is the right shoulder. So head and shoulder is a very good indication that a trend is about to change direction there. So as you can see here, when the market broke above this this low, right, it came back in the form of a right shoulder. It broke above the left shoulder, came as a right shoulder, now it's going upwards. And this is basically a neckline of a head and shoulders. So when the market comes here, for sure it'll drop a bit, like something like this, because it's going to be respecting resistance. Maybe drop a bit, and then maybe after coming here it'll start going upwards. So with the neckline, how do you trade a neckline? You basically wait for a retest, as always. Like, you don't enter the market if you don't have a retest. So yeah, that's basically head and shoulders. Well, this is inversed, but that's how you trade a head and shoulders. You incorporate it with your trends. As you can see, we're trending upwards right now. So since you missed the entry point from the right shoulder, all you have to do now is wait for the market to break out above this, come back, retest, and you buy. And then in order to catch these trades, these buys, you must go down to a smaller time frame like H4, in H4, the retest of this neckline is going to be much clearer. It's going to be better than waiting weeks and days just for one entry point, right? So, well, weeks. So yeah, that's basically how you trade chart patterns. Those are the most important chart patterns I know and I use in my trading. And then another one is a rising and falling wedge. Rising and falling wedge. So let me look for an example of that right now. Okay, maybe I have to go to another currency pair for this, like AUD CAD. AUD CAD. So for AUD CAD, no. Okay, yeah, here's a falling wedge. So what is a falling wedge, ne? Falling wedge is basically like a triangular type thing. It's hard for me to explain by words, but as you can see, usually when the market does this, when the market is squeezed in at the bottom, it breaks out the opposite direction and starts trading upwards. And if you pay closer attention, you can see the market retested here before going upwards, and as you can see right now, it's falling down because it has reached its resistance level, right? And it created a double top, what I was telling you about right now, and it's been falling down. So those are the 3 most important chart patterns I trade every single day. Now let me go back to GBP USD because it has some beautiful examples. So yeah, what am I covering now? Basically, that's it for now. Trend lines. I don't want to talk about trend lines as much because many people who teach trend lines, they teach you to trade 3 touches of trend lines and 4 touches of trend lines, which I personally do not do. And I know you'll be like, oh, but it works. It works because it was going hand in hand with a downtrend. In this case, it was going hand in hand with a downtrend. But I'm telling you, banks and popular institutions, they don't trade trend lines only. Usually trend lines are used to add for more entries, like are used for extra confirmation. Like as you can see, for example, here there was a 1, 2, 3, 4th and 5th touch of a trend line, and it was incorporated with the retest of a low, right, which now became resistance. Support level became resistance. So yeah, what I use trend lines for are to draw rising wedges, basically to draw a rising wedge and to find out potential retests of trend lines. Because if you use a retest of a trend line and you incorporate it with the retest of a high and low, it becomes very powerful. So yeah, that's basically it for now. I don't want to make the video too long. I hope you enjoyed my teachings. If you're looking forward to more, I'll definitely upload more videos. But for now, just stick to what I've given you, and we'll see in another time. Thank you very much. Subscribe. See you later.